All right, you're welcome to my channel. Today is 23rd March 2026 and it's a new trading week and today is specifically Monday. All right, so we are looking at this pair odd USD currently. Okay, we're having a structure on odd USD that we are willing to buy from this price range that I've marked. We are buying from here and we're targeting this high. Okay, so before we engage the market, we have to analyze the catalyst for this, what do you call it, bullish reaction. Okay, so at Nixon Capital, we trade with data, time, and order flow. So, but before we consider this our framework, we have to always check for correlation in other pairs just to find out that maybe this swing high correlates with a currency pair. Then that is where we can narrow our data and time with less effort. Okay, so when we look at Euro odd, we're having the same structure on Euro odd, I think 5th of February 2026, 2 p.m. And when we look at odd USD, 5th of February, yes, 5th of February 2026, 10 p.m. And I think the same thing is on GBP odd. Okay, we have the same structure on pound Australian dollar. Okay, so this tells us that after seeing this correlation, it tells us that whatever was responsible for this pivot in price was Australian dollar related. Okay, so that is where Nixon Capital will navigate to this time around 10 p.m. of 5th of February. We navigate to that time zone or time range to find out the relevant data that came in relation to the Australian economy. So when we go to Forex Factory, you see we can see 10:30 p.m. So we had RBA Governor Bullock giving a speech. Okay, so before we go into that, let me explain this real quick. Okay, as FX traders, this is what we have to pay attention to. For you to be, let me say, profitable in the FX markets over the long run, if you navigate your, let me say, your bias on the fact of, let me say, inflation and employment, that is where you get a real edge in the forex market, because the forex market is always paying attention to interest rate expectations from central banks. Okay, so in these central banks, their dual mandate is to control inflation and promote or create jobs. Okay, so in a situation whereby inflation is on the rise, these central banks are going to control inflation by hiking interest rates. Okay, and where in a situation whereby unemployment is rising or employment is decreasing, these central banks are going to support the economy with lower interest rates. And a higher interest rate tends or makes its relative currency appreciated, or let me say appreciate. And a lower interest rate expectations make the currency weaken in the long term, medium term, or short term. Okay, so that is just by the way. So when we go to, let's go to the data from that 10 p.m. by RBA. So with this entire document right here, what we're going to pay attention to is the inflation or the monetary policy decision and economic outlook. These are some of the headings that you're going to find: inflation forecast and, let's say, inflation dynamics or employment dynamics. And we have this subheading here, inflation and employment. So we're going to look here first. If you don't get any inflation forecast or employment forecast, we will go to the monetary policy section. So after carefully looking at this area, the governor said that, let's look at this line. The statement of the conduct of monetary policy sets out the agreement a whole lot. Okay, to achieve this, we set policy such that inflation is expected to return to the midpoint of the 2%. So they were basically explaining their monetary policy, how they use their monetary policy. But let's look at this range. I think so. They said the governor told markets that, however, after a period of being within the 2% to 3% target range, inflation picked up over the second half of 2025 to be materially higher than earlier anticipated. Okay, so she was just basically explaining how inflation has transpired in the second half of 2025, but that doesn't give us what we're looking for. So let's look at this area. I analyzed it earlier on, but where is it? 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 Oh God. All right, so with this inflation and employment section, she was basically explaining how they are controlling inflation and employment with their monetary policy tool. Okay. But when we look at this area, the economic outlook, this is where the projections comes in. So she said that as earlier mentioned, as I mentioned earlier, while inflation has fallen substantially since its peak in 2022, it picked up materially in the second half of 2025. It reinforces the statement that she made over here. And she was like, as recently as August 2025, we were forecasting inflation to be substantially back within the 2%, 2 to 3% band by this year. So let's look at this line, okay? So she was like, they expect inflation to fall back within the 2%, 2 to 3% band by this year, okay? So this is inflation forecast that they're looking forward for inflation to return to a 2%, 2 to 3% target range this year, which is 2026, okay? So, and when market had that, what do you call it, inflation forecast, you know, they saw that the RBA was going to be hawkish in the near term, okay, or they were pricing if there is going to be an interest rate hike, or they were pricing interest rate hike in the near term. So as price is trading around this level, we are always going to pay attention to the RBA statement. We need a time that the RBA governor will come back to the market to signal inflation forecast again. So when we get, and in this our case, we had the speech by the governor. She revised their inflation forecast upwards. Okay, so let's look at this area. Since the middle of last year, inflation pressure have picked up partly because capacity pressures have been stronger than we previously assessed, with underlying inflation now expected to enter the 2% to the 3% range in mid-2027. So you see, this was a revision upwards of their inflation forecast initially by the governor. Okay, the first report, which is this one, inflation was expected to fall to 2 to 3% by this year, which is 2026. And the next one that the governor came to the market, she signaled that inflation is now expected to enter the 2 to 3% in the mid of 2027. This tells you that the RBA is going to be hawkish. Is going to stay hawkish for long, because right now they see inflation not coming back to the 2% target range early. So there is going to be we are going to be in a restrictive interest rate environment for a longer period. Okay, so with that framework, we are looking to buy the Australian dollar USD pair from this level. Our stop loss is just going to be below this low, and we are targeting this high. And currently, price is inside the range, so we are buying currently. And when price gets to this level on Euro-AUD, we are selling Euro-AUD around this level, and we are targeting the retracement that we had to our entry level. Okay, so we'll be selling Australian dollar USD from this level. Okay, and we'll be targeting this high. All right, so based on the reason why we're selling from these zones is that based on the upward revision of inflation forecast by the RBA governor, when we get to that price range, there is a lot of for all Australian dollar, for instance, we are going to have sellers are going to get out of the market, because we, like those who are following the economic data, is going to know that yes, it was this price level that we had an inflation forecast, and this time around it has been revised upwards. So no more selling, or central banks, or let me say commercial banks, the interbanks participants are going to realize that we don't need to be selling the AUD USD anymore, and with that, this is going to cap downward selling pressure, and price is going to reverse upwards. The same thing applies to Euro-AUD. Based on that framework, with the inflation forecast being revised up by the RBA governor, we're going to have no more bias here when we get to this price level. So we have to expect a decline from here. So currently, we're just buying the AUD USD for the meantime, and we anticipate euro AUD to also go to this level, then we sell. So I think the video is getting longer. Let me end it here. See you in my next video.